Sydney flash vision session. Now we have a beautiful structure here. A, B, C, sorry, A. The entire up, which is the supply roof, is the A, acting as dynamic resistance starting from June 11. And we have the bottom B, acting as dynamic support, head price three times before we had an upswing. And technically, price is playing in the middle of the structure. So what it means technically is that it can decide to go up and it can decide to go down. So whichever position you take, you must hold it with caution. That is what it means on technical. Look at the broader picture of the structure. Look at the roof. This is the demand floor. This is the supply roof. And this is almost halfway. We have within the range two bounds holding price. Now the structure is locked on 2 hours and also locked on 3 hours. We have locked it here as a support structure and we locked it here as a supply roof. So we have an interchange between a support structure and a supply roof here. And it looks like structure has been broken here. But we want a candle close. Without a candle close, there's going to be a problem. The 3 hours candle has not closed successfully above the structure. If we have 3 hours candle close, which is a time frame that locks the structure close above the trend line, it gives us a buy momentum. If we don't have it close, then we get a pullback. If we get a pullback, then we most likely come back into 47. And at 47, we have tested 47 before. We will most likely not exert strong force at this level. Price might continue to break. So technically, we are watching the 3 hours candle to see 3 hours close. To be honest, a 3 hour close above that structure will reinforce a sell. 3 hours close above the structure will call for buy. So it's technically a wait and see approach, but I do hope that it favors buy side. Haven't seen what price did here. We broke out from this structure. We came back, we retested it. Retesting the structure is a sign that liquidity is coming. And where I see a potential break should be around 4,134. So I strongly believe that if the 3 hours candle closes a 1 hour 6 minutes above the structure, it gives me a clear confidence that we have secured a first layer defense, which is zone 2. We have secured zone 2. You see, securing layers in trading is not easy. It requires patience, it's a game of waiting. Every zone must be secured before you can go home and not have a pullback. We have not secured this zone yet. The 3 hours candle has not closed. It can pull us back. It's showing signs of potential pullback. If it pulls back, every buy idea will end in loss. And if it pulls back and we see it, it's most likely the next candle that is coming will continue to draw down. What it means is that the structure that was locked on 3 hours and also locked on 2 hours could not be broken. It means that there is not enough liquidity to continue upswinging. So what it means is that sellers are going to leverage from the structural foundation here and the structural foundation here to continue to sell down. So if we secure this zone through 3 hours confirmation, once the 3 hours candle close above this structure, we are riding to 4,130. Most likely, the probability becomes very high. But for now, the trade is in serious limbo. We cannot guarantee that the market will go up or the market will go down until we have a successful break and retest. That is what we want to see. Now look at the structure in time past. We have here a support structure and we broke that structure after we had here as a resistance structure. A clear breakout of a 3 hours candle came for retest and we sold. We came back for retested, we sold. We came back, pierced the structure, sold again. We had a clear breakout of structure. After clear breakout, it became a buy confirmation. We bought. We returned here, we respected it. We broke the structure and sold. We broke it back and we bought. When we broke the structure here, when the candle opened, we sold till we got to this level where price was contested at 3,960. And when we return again, you see we respected that structure. So technically, that structure is weak. And we return again on Wednesday. We tested the structure and we sold. Now we return yesterday. We tested the structure. So technically, this structure is weak. What it tells you is that buyers are tired of this zone. They want to create a new zone. Even if they want to sell from a higher zone. Because at this level, we have had three drawback after testing the structural level on 3 hours time frame on that descending trend line. Structural retest 1, structural retest 2, structural retest 3, structural retest 4, 5 is enough. Let's go up. We are tired of this zone. I want the market to move up. The market moves up into 4,136. I expect a bearish reaction at that level. That bearish reaction is locked on 3 hours close. If you look at the structure, you will see that we have a horizontal lock structure here where we have a broken structure, retest 1, retest 2. Technically, we should have some rejection at this level, and if we continue to see presence of liquidity, then price may move up to complete the ascending trend line. The ascending trend line, after forming a W structure here, broke out of the neckline, retest 1, retest 2, break of structure, followed by a retest 1, retest 2, retest 3 on a descending take on ascending trend line. The trend line is ascending, but every structural test is a sell. Structural test is a sell. Here we form the double top, break of the neckline followed by a sell. So technically, if price pulls into here, that will be around 2,293. So this is the structure of the market. That doesn't necessarily mean this is what is going to happen, but at the moment, this is what the market has done. At the moment, this is what the market has done. And one beautiful thing to see here is this structure. Let me. It was a strong confirmation buy as the Sydney market opens. I saw that structure and I leveraged on that structure. Look at it from the line chart. We have here as a support structure. We have here as a support structure. And we have here as a support structure. So we have three support structure lock, one supply roof, two supply roof, and when price broke that structure, it returned back here and it became our buy confirmation. And you saw what happened there when price returned there. It took liquidity for a while at 4,000, and we see that price has moved. Price has moved. Look at it. After we broke, we returned back here at 3,960. We have moved from there, and this kind of breakout, honestly, also gave price the ability to break out from this short-term descending trend line. You can see a breakout from here. Price also broke out from that structure, and we had a retest there on the lower time frame. If you switch to a lower time frame, I think 30 minutes, you have a retest after breakout from that structure, and we have seen a price move. So what it means technically is that even if price is falling back, we may want to also use here for possible retest. A breakout from the descending trend line could become a potential support structure in the future if price happens to fall. But at the moment, what we see, I think buyers are really staging something that they could most likely just pierce here and continue to move on. This is what I see for the Asian section, and this chart is valid not just for the Asian section, also valid for the Sydney. As we march into London section, it's also valid for London, and we come to the King of Volatility New York section, where I expect that New York liquidity could push price into 4,134, and as liquidity continue to push, we could see a push into 4,287. And this rests my case, and here is going to be a payday. Why here is symbolic is that it's a break of the previous highs. These are all the highs. The strategy is simple: buy at the break of a previous high. When you want to buy, you make sure, sorry, you buy from the break of the previous low, and when you want to sell, you sell from the break of the previous high. So this high, this high, this high, we want to take all of them out. We want to take the highs all out. Highs from June, the entire June high, we want to take all out. So if you want to take them out and you want to maintain the trend, price has to come here. After here, these are all A trend. A on the same ascending trend line. So if price comes here, we are going to take all of them out, and here we plan a sell. So that's what we see technically for now.